People are being laid off. Everything costs more. The interest cost of borrowing for anything is going higher and higher. And we are slowly grinding towards a position where something that's very weak cracks. And what that means is that company ABC that's got too much debt comes out and says, we're bankrupt, okay? And we're waiting for something big like that. But while we're watching this happen in real time, okay, this is like a purgatory style situation. You have to stay in the game meaning you have to remain solvent so that you can play in the next inning, all right? And now is not a time, if you notice, nothing is going up in value on a speculative basis. All these stocks that were flying in 2021 and 2020 are in the toilet, okay? All these things that were popular are way, way down, and they're not going to come back up because people don't have surplus income to buy hope and prayer style half-court shots. What it is that everything's costing more money, and so there's money coming out of the system, and at the same time, the rates are going up so fast. So the Fed is going to go until that happens. Now, while the Fed's going, get away. You see the blue lights? Don't go to that party. Go to some other party or go home and wait. It's really hard for people to wait, but you're in a scenario right now where if you make a big move, you're probably going to get hurt. Everybody's obsessed with crashing. It's not a crash, but it's a period of time where the market goes nowhere. We've had this before. I mean, late 60s, 70s, the Dow went nowhere. It hit 1,000. It took 16 years to go up from there, right? So this can happen again. And also during this time, it becomes difficult for the Treasury to finance itself. You start hearing Yellen, she's rumbling about the debt ceiling and all these different things. I mean, this is coming to a living room television near you. I mean, not my house because we don't have a television, but this is coming to the evening news near you, this debt ceiling and what are we going to do? And maybe we got to raise the tax and we're not sure what to have happen. And I mean, the system is majorly broken. It's a centrally planned economy, and you cannot control something but so much. You know, if you exert so much control, you know, things pop out from places that you were not expecting. So as the dollar starts to roll over, as money starts to come out of the US system, as the interest rates continue to go up and the Treasury needs more and more money because you can't cut any federal programs. Once you start them, you cannot cut them. And nobody wants to give anything. And all this happens, you have to really ask yourself, what are other countries doing? Okay, well, you said China, Saudi trading together. Like, I just want to mention one thing about gold, because, you know, we're kind of getting tired of talking about gold for years because it hasn't made a lot of sense. But in the fourth quarter, the price got to $16.25. The price of an actual physical ounce was about $18.75, an eagle, right? So if you called up your dealer, give me an eagle, about $18.75. What are you talking about? It's $250 less in the market. Yeah, but that's an ounce. It's futures price. The price is $1,900, and the price of the ounce of gold is like $1,960 or something, right? It's not that much. And so the price has not really gone up. So what you saw was the futures price come back up. And I think there's been pressure with a lot of these central banks, a lot of these other governments saying, like, you know what we're going to do? Actually, maybe we get rid of some of those treasuries, because, I mean, you know, they're printing plenty of those, and maybe we get a little bit of gold. I mean, what do we got to lose, right? I mean, we can always, the Saudis will take it from us. The gold industry is so small, it's a pin dot on the screen, right? It's so small compared to the overall capital markets, okay? And what I mean by that is you see these central banks buying, you see these countries using gold as a mechanism to trade different things. You see what I'm talking about with the physical price. And then you get into the industry and you realize it's shrinking. Production is shrinking. There's nothing being discovered. There's only 2 royalty companies under $1 billion because there's been 9 acquisitions in the last 19 months. There's nothing left. And then you look at the mining companies and you look at, you know, Barrick and Newmont, Agnico, that's pretty much it. I mean, then you have a couple of junior size, and then there's nothing. And the Vancouver scene, there's nothing to speculate in. I mean, you know, it's dry, it's bone, it's like a dry creek, okay? And so where are you going to get the gold? I mean, you look at the numbers this is the futures market here, where you look at the numbers, you're like, this is not gold. This is like, paper. It's paper chasing paper. Now, so what I think happened in the fourth quarter was you saw some of this demand is overpowering the futures market. And so then you have to ask yourself, what is really the price? What is actually the price of gold if the few miners that are left are not really making money? You know, their oil prices are higher, their ESG costs are higher, their labor negotiations are higher. The Chilean government wants, you know, a pound of flesh to keep mining. The Panamanian government renegotiates, you know, with Lundin and all these guys. Think about it. It's crazy. And so what is the real price? And so this year, I think we'll find out what the real price is. And to be clear, I don't think it's like dramatic. I just think that $1,900 is not like an actual real price for gold. You know, it's got to probably have a 2 on it. I think you're going to see other people saying, guess what? You want to hold it at 1,900? I'll take a plane full of it, right? The other central banker says, give me a whole 747 full because I'll take it at 1,900. What you want to own is the hard stuff. You want to own the actual resources, because what you're seeing is the resource producer is beginning to assert power that the resource producer hasn't had in 25 years. The whole game plan is I scare you and then I offer you a security blanket also. All right, so you're scared, and now I got a blanket for you. Here you go. All you're gonna have to do is give up a little bit of your freedom. Okay, I'll take it. That's the game plan. So you create a system, a rattling of the system. Do you remember the 1930s, the FDR gold thing? Every single day it was, you know, these traders have the gold and the country, you know, so you scare, you get the gold, and then you revalue the gold. That's the name of the game. So it's the same thing every time. And that's the next phase of the process. I mean, that next phase is a wonderful amount of control if you're a central planner. I mean, you reassert yourself as controlling this little, remember the world's going into zones. So you reassert yourself controlling this zone. And you got to think that that's ready to go this year. They're testing parts of that. There's been articles about this on the Bloomberg that, you know, the Fed is working on this. It's impossible to know, but it's coming. And we know the Chinese have been testing it, right? They've been giving people some digital yuan to try. We know that they're trying to create the Belt Road Initiative circulating on. There's a name for the system that they're creating. So we know all this is happening. So we have to say it's got to be right there. I mean, it's totally logical that you would have this whole recession. You know, there's all this recession fear. Something rattles really hard, and this is the next phase: is that we stimulate you with your FedCoin wallet.